Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and today we are navigating through the interesting strategic transaction, as it's been described. That is the tie-up between FTX and Binance, where Sam Bankman-Fried and CZ of Binance made statements that the two entities have entered into some sort of agreement to merge their respective businesses. And we're going to probably try to incorporate as many different market participants into this multifaceted show. And of course, we went directly to one of the most prominent decentralized finance investors in the market, Framework Ventures. And on the other side of the mic is Vance Spencer. But before we dive in, I just want to take a minute to thank our sponsors. Get ready for Season 3 of the Tron Grand Hackathon 2022 with a total of $1.2 million in prizes across Web3, DeFi, GameFi, NFTs, and the newly added Academy and Ecosystem tracks. The wait is over. Tron Grand Hackathon presented by TronDAO. To learn more, visit trondao.org. This episode is also brought to you by Ledn. From Bitcoin and USDC savings accounts to Bitcoin-backed loans, Ledn's financial services enable you to benefit from your holdings today without selling your Bitcoin. Learn more about Ledn at ledn.io. Ledn, where your digital assets come to life. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of the blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblock.co/terms-service. All right. Once again, we are very excited to welcome Vance Spencer. Sir, the markets have been spooked, as it were. How are you feeling over there in San Francisco?
Yeah, thanks for having me on. I feel pretty good. We have very little exposure. We have no exposure to the Sol ecosystem tokens, FTT, Serum. We've never put money on FTX. We've never, to our knowledge, traded against Alameda. But so we feel good. It's obviously very surprising in some sense. It's not surprising in many others. The way that I like to kind of think about this is, imagine that I told you that Brian Armstrong had his own prop shop that traded most of the volume on Coinbase, and that borrowed, assets from customers. Would that raise red flags? Of course it would. But for some reason, last year, in a lot of the swept up media circus around SBF and his hair and his effective altruism, that message was kind of lost. And so my heart goes out to everyone who has money stuck on these exchanges. But I think in many respects, I couldn't tell when it was going to happen, but it's not surprising that it eventually did.
Okay, so there's a lot to unpack there, namely the fact that if you think about what happened, and we can lay it out, right? If you rewind the clock to this weekend, there was clearly some sort of run on FTT, which, if we believe reporting from CoinDesk, made up a large chunk of Alameda's balance sheet in terms of the collateral that they had locked up for certain loans. So there was a marriage, if you will, between these two firms, between Alameda and FTX in this form of collateral. And it stood up for a while. FTT traded relatively stable up until, let's say, today, when it all unwound. And this is sort of the micro calamity that speaks to your broader point, which is there are these two firms that operate in a sense as black boxes. And, you're raising an interesting question, which is no one really dug into the potential conflicts of interest that might reside between the two firms there. And now they've been brought to light. But if we think about at a high level what happened, is this at the core of the thing? Like no one questioned that Alameda, FTX, FTX US, like were operating this in this weird incestuous way? Because I feel like that was a big question. And like to your point, not to make things personal, but I feel like people were always like, yeah, like FTX, Alameda, and then it all kind of unraveled. But why?
I think the why of it unraveling, there was the DCCPA fight, which cast SBF, and I'm just running through the past couple months of things that happened. So there was the DCCPA fight, which cast SBF in this kind of negative connotation and certainly alerted, or at least so it seems, CZ to the fact that, SBF might be in Washington trying to regulate Binance out of the market or into a weaker position. So there was that. There was the CoinDesk story, which had the balance sheet, and it was an old balance sheet of Alameda, and I don't think it was necessarily complete. But I would say you didn't get a complete picture of what was going on, but you did get a picture of what assets they held in what rough denominations, and things stood out. Like they owned 10% of the Solana supply. They controlled most of the float of FTT. And, I like to think that we're smart. What I was expecting, a giga brain firm like Alameda to have on their balance sheet was probably like, sovereign bonds offset by, equity positions offset by, other hedges. But it was just kind of like a retail crypto portfolio. That was at least my takeaway from seeing that. And so you had those two kind of things. And then you had CZ basically saying that he was going to sell 500 million of FTT. And, those things combined, I think were, probably could have been survived. I think what really happened here was that, the FUD around their insolvency, and maybe it was FUD, maybe it was fact, I don't know, turned into a very real bank run. And that was kind of the straw that broke the camel's back, that facilitated the deleveraging. And then, for us, when I knew it was really going to go south was when Caroline put out that, we'll buy all the FTT back at $22 tweet. For future billionaires, for people who are going to design cryptocurrencies, if you ever find yourself in a credit crisis or a currency crisis, never tell people how much you're willing to spend or what price level you're going to defend. That is kind of like the thing that is just a universal red flag, and that also takes away all your leverage. So today we're in this position, but I think that's what led up to it.
Vance, I think that speaks to a point that is resonating throughout the folks that I speak to, which is how key was this mishap by the CEO of Alameda to the unraveling of this entire story. So it made me think about U.S. equity circuit breakers, where one of the arguments against them is it literally creates a magnet for the market, where to an extent, when you have things unravel, people will immediately go to that circuit breaker price. So if markets draw down 20% and that's the barrier, you're going to go straight to 20% down. And that's kind of what we saw with FTT, where she came out and she said $22 a token or per token. That's what we will buy at. And that was the floor for a while until it wasn't. But I mean, like, it's easier to say in hindsight, but to what extent was that the biggest mistake? And we still haven't heard anything from them on that, from Alameda in general. I mean, like, it's just pretty crazy.
It was one of, there was a lot of mistakes, I would say, poking the bear of CZ, knowing that he's one of the richest people in the world and he's probably going to take some sort of shot at you during the bear market. Like, that was the first mistake. The CoinDesk article was like eerily well timed to kind of sit in the middle of all of these events and cause, more pressure to build. but I think the $22 tweet was really like, once you put a marker out there, at least in crypto markets, people tend to test
Creates a magnet. And
Right.
Vance, did you look at the chart throughout the day, like over the past 24 hours?
Oh yeah, I've just, that's, and like we've traded
You can
through a
see
lot
it.
of.
You can see it. Like you can see, maybe it's Caroline, maybe it's Sam, maybe it's FTX, but you can see the bump up and then the immediate hit down. The bump up, it's like the little engine that could throughout the day until it literally couldn't anymore. Like, I'm not trying to be facetious. Like, if you look at the chart, that's what it looks like.
The charts never lie, right?
The charts never lie.
It's I think the bigger question for me is, how does all the math make sense? So like, SBF last year worth $34 billion, like maybe that gets cut in half this year just because prices go down. He still tried to commit like 5 billion to the Twitter deal, right? FTX is super well capitalized, apparently, spitting off, you can back into the revenue numbers just based on the FTT burn. They were spitting off probably like 500 to $1 billion of cash flow per year. Alameda, like I think the balance sheet was like 15 or 20 billion or something like that. At least in that CoinDesk report, and what Caroline stipulated as well. And so kind of what I'm wondering is, how is $500 million market sell of FTT a large enough number to make this accelerate? And then B, like, how big is the aggregate hole? Because if it's that much amount that can push you to the brink, like, what's the net deficit overall? Like, we've heard, 2-3 billion. We've heard, other much larger numbers. Like if I had to guess, I would guess at the lower end of the range. But
it still doesn't make sense from
still
your
doesn't make sense,
perspective.
right? The math doesn't really fit.
Because if they're making money hand over fist, if they're able to sort of facilitate these political donations, if they're able to sort of be the lender of last resort for so many of these companies, if they're able to invest in so many of these companies, I mean, even just thinking about one of the questions I had with their VC operation, you allocated $2 billion to invest in venture startups. How big is the hole that you can't just take that and say, okay, we're going to take this, what we were going to use to invest in startups, to cover this egregious accounting error that we have. So not to sort of take too much of a digression here, but you're right. Your point, which is the extent to which there was such a scrambling in the backdrop of a seemingly easy ability to spend money. Let's put it very frankly.
Mm-hmm.
Doesn't make sense. Like, how can you springboard conferences in the Bahamas? How can you be the lender of last resort to the Celsiuses and the Voyagers of the world? How can you be the second largest donor as a Democrat to American politics and then find yourself in a situation where you need to parachute out of it through CZ? It makes no sense.
The last part is the part that waking up I was the most surprised at, because I know the two have a just personal animosity for whatever reason between each other. When I went to bed last night, when I woke up, I was like, I expect when I check my phone that everything's going to be destroyed, but there's going to be some sort of solution to the problem, and it'll probably come from, if you look at the FTX cap table, Temasek, SoftBank, Lightspeed, Tiger Global, the biggest, most deep-pocketed funds in the world, and they just didn't show up. And so, the question I have is not only how big is the hole, but like, why are they not, on the spot to kind of backstop? Because, that's a lot of what these firms advertise is their high conviction in founders, investing through the bad times, et cetera, et cetera. For you to, go to your biggest rival who's actively trying to kill you and sell to them implies to me that the other people weren't biting, and that they were kind of the only option. And so if they are the only option, what this makes me think is that the hole is either very large or there's something else on the balance sheet which caused other people to pass. Like, is CZ willing to actually close this deal and take on all of the whatever the problems are on that balance sheet? It's unclear.
I mean, allow me for a second to be like, to play devil's advocate for some of
Totally.
these firms that you're outlining. It's quite a jarring juxtaposition to go from. And I was talking to, I got lunch. I escaped from the desk earlier today to unwind, and I was talking to the waitress, and I said, we went from someone who was having Bill Clinton speak at their conference to effectively, we don't know all the details, be at a breaking point at which their largest competitor had to swallow them up. And, I think when I'm thinking about the folks that are within Paradigm, Multicoin, Sequoia, and the rest, I mean, the whiplash has to be unlike anything they've probably ever experienced.
Yeah, I think he was advertised as like the savior of crypto. My personal belief is that crypto like does not and has not ever needed saving. It's kind of on this decentralized, community-run, community-owned effort to bootstrap itself to adoption. But Bill Clinton obviously didn't know that. I forget all the other luminaries: Tom Brady, Giselle, all of those people. And he misrepresented it as a lot of
Katy Perry as well.
Katy Perry. Yep, the curse of Katy Perry honestly strikes again here. But he was advertised as kind of like the man for crypto, and a lot of people in DC know him that way as well. I think the bearish take is like we look foolish, and that's very true. We're just going to have to put in a lot of time and effort and send policy people to DC and do the hard work. But I think we'll get there. I think the charitable case and my case is that CeFi and DeFi are now clearly very different things. Opaque, centralized exchanges that borrow their customers' funds that end up with big, whale-sized holes in their balance sheet, very different than autonomous smart contracts. And the autonomous smart contracts, the decentralized developers, the people who use them, those are who I consider to be our constituents and the people that we fight for. And so, it's heartbreaking to see people lose money, but we did not ever really ask to be saved or for SBF to represent us. I just want to make sure that that's clear.
I think even at a more basic level, like when I think about people to come on my show, the number of like respectable, smart people to invite has grossly diminished as a result of this credit crisis. And people are not willing to defend themselves. They're not willing to defend themselves to their counterparties. There's cowardice. There's a degree of, regulatory fear of reprisal, of course, but they're gone. And so even from just a hosting perspective, it's like, who do I talk to? I'm being serious. I can talk to you, Vance, because, you don't operate a lending firm or a centralized exchange, but it begets the question, which is, who has the opportunity here now where we need lenders, we need a vehicle through which we can exchange risk, and an exchange through which we can trade. And the DeFi participants seem to have the opportunity here because everyone else is gone. Or from a competitive standpoint, like, I don't like that the market is just Coinbase or just Binance.
I think the good news and the message that I want to convey is that, framework, the developers that we back, the spirit of the industry that we support, like we have a plan. DeFi is very quickly rebuilding the credit infrastructure that frankly no longer exists post 3AC, Luna, whatever you want to call it. The centralized exchanges are gaining in volume, relative to centralized exchanges on most days. And we're bringing a lot of people into the industry through games. Like whenever I get a little depressed about like, oh shit, like another week where we're just going to blow something or somebody up, like I just go to the startups that have traction. I look at their numbers and I can see the path to adoption. I can see the path to it being a more decentralized, transparent, competitive ecosystem that frankly has less to do with centralized exchanges and more to do with just endogenous on-chain use cases. And that's the stuff that gets us excited. So like there is a plan, I would say. And, you know, Coinbase and Binance, like we're kind of where we were in 2018, 2019. Like those are the only two games in town. We didn't feel like we were missing a ton, but we also didn't have DeFi. And I think DeFi is well positioned to come in and really make a difference in terms of giving the industry more alternatives to choose from than to just gigantic, deca billionaires. And CZ is also moving in that direction to his credit. Binance Chain, a lot of the DeFi being built there. Coinbase is building inroads to on-chain use cases through Coinbase Wallet and a commitment to things like liquid staking, and just generally putting their users on-chain. So there's reasons to be hopeful, and those are the things that I wake up, and think about every day. I'm really not trying to think about, what the latest, dire news is, because in my mind, I do think the FTX stuff is bad. I also do think it's going to blow over a little bit easier than Luna 3 Arrows, whatever you want to call it. So there's reasons to be optimistic, and I think the guests that you have on in your show in the future are going to be really dynamic young entrepreneurs, hopefully from America, that are building really awesome use cases. And I see 4,000 pitches a year, and I just know that those are coming. It's hard for everyone else because they just don't see that many startups. But like the talented people are here, they're building. Like there's reasons for optimism.
Get ready for Season 3 of the Tron Grand Hackathon 2022. There are a total of $1.2 million in prizes up for grabs in Web3, DeFi, GameFi, NFTs, and the newly added Academy and Ecosystem tracks. So what are you waiting for? Join Tron for an opportunity to showcase your work, win funding for your project, and network with other builders in the community. Tron Grand Hackathon, presented by TronDAO. To learn more, visit trondao.org. I also want to give a shout out to Ledn. Ledn, Bitcoin-backed loans and savings by Bitcoiners for Bitcoiners. As we've seen, not all digital asset lenders are created equal. Ledn prioritizes safeguarding clients' assets with its robust risk management approach. That is why Ledn doesn't actively trade or invest in DeFi yield generation strategies with its clients' assets, and only supports Bitcoin and USDC, two of the highest quality and most liquid assets in the industry. Ledn is also dedicated to transparency, which is why they are the first digital asset lending company to complete a proof of reserves attestation. Learn more about Ledn at ledn.io. Ledn, where your digital assets come to life. Okay, so let's, think about what the market structure for crypto looks like in 2 years or a year. Who are the prime brokers? The lenders have been wiped out. As a market participant yourself, we talk about how you, as a firm, are leaning more on potentially decentralized alternatives. In 2 years, is the counterpart of Genesis or Alameda or whatever these market makers are, like, if we're looking at the glass half full, like it literally could be a Maple or could be a Clearpool based off of everything, because, worst case scenario, crypto doesn't work. We're all out of a job. Me, you, Vance, we're brushing up our resumes, or these decentralized lending exchange protocols become insanely huge.
I'm going to go with the insanely huge perspective. And here's why. As a market participant, we refuse to borrow from any centralized OTC desk. It's cheaper. It's more transparent. They don't rehypothecate our capital. And it's funny, like if you look at the regulators, they only want you to borrow from centralized exchanges. They only want you to borrow from centralized OTC desks. And so when they come and they ask us, why are you doing this? I'm like, hey, here's our money. It's right there. We know how much we're paying. We know where it's being used. It's more transparent. And that's basically the case for, most of the use cases that we have. If it's buying assets, if it's borrowing against assets, if it's using leverage. Like we do it in a decentralized context for a reason. And so I think the base case is that they grow very quickly. And you can see that, Maple is growing very, very quickly. So are a lot of the other startups that are doing liquid staking, borrow lend, whatever you want to call it. So I don't know. It just feels like we're waiting for good enough wallet architecture for normies to use it. We're waiting for cheap chains. We have that now. The prognosis is strong. It's it's easy to be bearish on a really bad day. It's easy to be bullish on a really good day. I think it's, you just have to see the trend for what it's worth. And the data's all on chain. You don't need to guess at any of this stuff. It's all there. And that's what I spend most of my time doing, is looking for who has traction, who has product market fit, who's spitting off real revenue. And there's a lot of protocols that are. So there's a lot of reason to be optimistic.
I feel like if I was sitting in your seat, I probably, and I don't say this being overly brown nosy, as it were, but your thesis probably hasn't changed by more than 5%, 10% in terms of the way in which you look at the market. But in the gap there, I would imagine regulation is a concern. I feel like you've always had a relative disdain or animus for, as an investor, not from a personal perspective, centralized crypto opportunities. You're not the person who's coming to me pitching me about the super cool, like NYSE NASDAQ backed prime broker startup that you're excited about. It's very much in DeFi, but when you think about the ramifications this has from a regulatory perspective, does that maybe hit downstream some of these more peripheral opportunities in this market that you're investing in?
Our thesis has not changed a lot. We've added things like gaming. We've added things that are more consumer and top of funnel, just because we realized that there's this myth of the killer app for crypto. And the myth goes something like this: we're going to build one app and it's going to bring in 1 billion people and it's going to be incredible. And, that's all we need to do. We just need to, find the way to get to there. I think the more likely story of blockchain adoption is sequential. We bring people on, with a game. Maybe it's not gigantic, but it gets them on chain, or Reddit NFTs. It gets a few million people on chain. They come for the punch in the pie, whatever, and they stay for the DeFi. They stay for the other applications. And so it's more of a story of like sequentially bringing people on chain, building a killer app out of a few different applications, and just building enough of a life for people on chain where they can make some money, they can meet some people, they can stay for the culture, they can stay for the technology, whatever it is, but it's not going to be just one singular thing. And so, where we've kind of changed our thesis over the years is just being more pragmatic about, we need to invest in top of funnel things like games, and we need to also pair those with really solid DeFi investments that are going to be the base infrastructure for people being on chain. And so we haven't changed a lot. We definitely got a good amount of shit over the years for not doing things like Luna or Solana or whatever the latest base layer is. But, we're nothing if not consistent. And, there's very few people or funds or companies that make it across market cycles. We're determined to be one of them.
And what do you think is the bet that will bring framework across that chasm?
I think the things that we're known for are being basically like the progenitor investors of a lot of the DeFi protocols. And I think we've built our reputation and brand in being good stewards of that space. Now I think it's about the game has changed a little bit. DeFi is getting, potentially more regulated. Things like payment for order flow, MEV, and staking are more, contemporary than like building a money market on Phantom or like a money market on, the 65th L2. We're trying to be more pragmatic about where we are in the cycle of adoption and what the market actually needs versus like this Cambrian explosion of throwing spaghetti at the wall and seeing what sticks. So that's definitely
because you have some ETH on the side,
right? We know how a lot of these markets are going to play out. We have a lot better idea than we did before, and we're just using that to our advantage. And I think we have this application layer thesis of games, and that's going to be kind of our big consumer side. We have DeFi, which is largely infrastructure, but I've said this many times. I do think the most compelling thing that you could possibly build with the largest market is sustainable internet money. What does that mean? Something like Ethereum, which is about to go deflationary because of all the activity today, where you are highly leveraged to the digital economy, where people can buy it, stake it, earn yield from it, where they can use it as their unit account for NFTs or buying other digital goods and services, and trying to bring a lot of my generation and Gen A and Gen Z on chain. And I think that's like the biggest opportunity. And I think all these things are going to play out in kind of a confluence where more games means more people on chain, means more people using DeFi, which means more ETH getting burned, which means it's more sustainable. And so, I want to push back on the idea that there's one killer app. It's an ecosystem thing. And the more people that you bring on chain, it's just like a bigger social network, but with money. And the way that I think about, different chains has also changed. Like, I kind of see Ethereum like as the cost of compute and the cost of transactions go down, blockchains are going to be more commoditized. Everything will be roughly the same price.
When did that switch turn for you?
I would say it turned last year, and I was initially pretty scared for Ethereum. And Ethereum is a large holding of the fund, so full disclosure here. And I was saying, oh man, ETH might be toast. But the things that I realized are, I'm never moving my net worth off of ETH L1. All the best NFTs, all the centers of culture, of art, of whatever you want to call the vanguard of crypto are on ETH. It's the most sustainable. It has the highest revenue. It has the most deflation. It kind of is like the LVMH of like internet money, where it's super premium. Why do you launch an NFT collection on ETH? Because that's where all the cool people are. That's where all the press is. And you look at a system like Polygon. Maybe if ETH is LVMH, maybe Polygon is like Gap or Old Navy. There's these different levels of
Oh, come on. I think that's a little tough. Like,
okay.
maybe they're Banana
Banana
Republic and
I'm not trying
Crew.
to be punitive to Polygon. I'm throwing out other analogies. But that's how I kind of see these.
I'm just giving you a hard time.
That's how I see these things. And I think, our thesis is playing out. I feel confident.
Fair enough. Okay, so I want to be respectful of your time, and hopefully this is just good fodder for people in our audience, like have like really like you guys are coming from a perspective of not being hit hard. You're looking at the market, you're trying to sift through it in a very like level-headed way. And I feel like that's what most people want right now. Like, they don't want name calling, they don't want emotions flailing. They just want to hear what people are thinking in the aftermath, in the wake of this market event, which I think we delivered and will deliver with guests that are to come. But if you think about what has happened in terms of the uncertain position of Alameda and FTX, are there any lingering thoughts that you might have?
So after the Luna 3AC, Celsius stuff, there was kind of this feeling of, is the monster dead or just hiding in the closet?
Now the monster's certainly dead, which I think is what you're going to say.
Well, and like it's a function of, okay, Celsius rolled over, then Luna rolled over, then 3AC rolled over. I think that was how it happened. But like there was this sense of like cascading dominoes. And that's kind of what I mean by, is the monster still alive? Like, is there exogenous credit risk that's associated with FTX, which is going to cause someone to turn around and dump like a few yards of crypto onto the market just to get themselves into a position where they're financially stable? Honestly, since the summer, the crypto market for lending has been so slow and so restrictive that I just don't see the leverage, and I don't see the credit, coming from crypto native players who are backstopped by crypto assets. I kind of wonder who's the largest creditor, because that's what we still don't know about Alameda. Is it an FTX? Is it traditional financial institutions? Is it Asian lending firms? Is it like DeFi protocols? I would say it's probably not the DeFi protocols. I would say it's probably not the crypto native lenders. Like I think it's the institutions that are TradFi, but I'm not sure, because like this leverage came from somewhere, but I just know that they couldn't get that much borrow in crypto native. So that's what I'm thinking about. And my sense is that this is going to be less drawn out and less of like a game of cascading dominoes than Luna 3 or Celsius. But we'll see.
Vance, you make such a good point, because even as I was sort of wading through a lot of the questions that you're sort of addressing here, which is where's the risk? Where are the counterparties that are going to get hit the hardest as a result of this? I was thinking, which lenders? And you're saying this in a much more eloquent manner than I, which is yes, there are groups at some point in the cycle here that have participated in this leverage event that are unknown in terms of their profile.
Mm-hmm.
Because, well, who are they? And where are they? Is that the very essence of your question, or the essence of the point?
It is. It's kind of like, what are the second order consequences of, Alameda or FTX potentially going bust? Is it so? There's like a few options, right? There's, you lend.
I don't know if I want to hear those options, Vance. I mean, come on, this has to be it.
Okay. So the first option is that there's a large creditor spillover. So, after I'll always remember this weekend, I was in New York with Michael, and it was during the Three Arrows Luna Celsius debacle. It was like a Saturday. I think it was like June 15th or 16th. And there was so much volume on all of the exchanges on a Saturday, and all of the centralized lenders were clearing their books, trying to recapitalize themselves. And I think it was like all-time high for volume, like ever. And like, I literally thought we were under attack. Like, I was Googling like news events to see what was going on, because it just didn't seem possible. That amount of forced selling is going to be very hard to replicate. And I just don't know, to your point, who's lending the money that could be, something that they need to turn around and dump a few billion of crypto. It just doesn't seem possible. So that's one. The second one is the TradFi institutions. And I think that, like seeing Silvergate stock down 20, 25% today was, maybe it's just crypto beta correlation that people are shorting. Maybe it's something else. I have no idea. And then the third one is like, the tokens take the beating. And which tokens are they? It's Solana, FTT has already taken it in the shorts. And then it's Aptos. And so depending on where you're sitting, the prognosis is either very strong or very weak. It's just that type of market. Feast or famine.
Feast or famine indeed. And I think that you hit the nail on the head there, which is we don't know what's going to happen next, but we know what principles will work.
Mm-hmm.
We know what elements of crypto will work. And, at some point, I think maybe 6 months from now, a year from now, 2 years from now, we can be very hard on ourselves about where we went wrong specifically. And we all went wrong, I think. We all turned a blind eye to certain practices, thinking maybe it would benefit the greater picture.
Mm-hmm.
Especially in certain characters. Be that as it may. Appreciate you hopping on the horn.
Of course.
The Scoop will be back for you with another great guest. Have an awesome day.